Alright, good morning, YouTube land. Could you hear me? Alright, good morning, YouTube land. Could you hear me? Guess you can. Alright, just confirm someone else can hear me. I heard it on my YouTube, but just let me know you guys got me. Please, somebody. Thank you, Gabriel. Alright, I will be back in 1 minute.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will prompt trade losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and most Stops and Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CITC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may amount or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results at all, of which can adversely affect actual trading results.
This trade room and this webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis itself I share trades and potential trades that I'm taking myself based on my personal analysis. The goal is to risk trades on identify specific areas of trade and then response by automating decision yours. Trading is extremely risky. You decide to make personal trades, you sort your own risk and potentially lose your entire account even more. I'm not responsible for $15 on trading accounts. The spreadsheet that access to is my personal spreadsheet that I use at its own value to make values and I'll need to avoid exact prices for my trades. You can see when I add its own prices into the master spreadsheet as well as prices of trades whether you have a long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm its own prices into the trading and its own spread yourself. The spreadsheet is not telling you which direction to trade as it has actual prices and stop prices for long and short positions depending on which one you personally decide to trade.
All right, good morning. Welcome to Euphoria Land, where markets never go down. So, somebody's betting that this market's going to stop here. This is an area to mark on your charts going forward. A lot of times when these, so you see the sell ice coming in, right? So, I'm not going to get into the basics of this stuff, but icebergs are basically hidden orders in the order book until they're traded into. They just have to flash a certain percentage, and I think it's 10% in the order book, and then once that's filled, the rest of it populates and activates, whatever term you want to use. But you can see here as this market made highs here, you had 280 sell ice, then you had another, this was a double whammy where you had dumb money pukes. We'll go over to gold here in a second. You had the dumb money puke into the waiting hands of the sell ice, another 564 here, then another 334, another 407, so another 700 I could buy in these two zones. So the bottom line is, this may not materialize right now. I'm hoping it does, so I want to short this if this occurs because my filter for shorts, and we'll go over this stuff, but algo guy is just pulled bearish, so that's good for some of my trading strategies, which we'll get into. But overall, this is an area that you want to mark on your chart. So you're staring at a bar chart like 99% of traders that don't have this information from Bookmap, the information. You're looking at this and it just looks like a regular. Hold on, let me get this out here. It just looks like a bar. Well, you know what's inside that bar, right? Bunch of sell ice. So this market does this, and then a couple days later it comes back. You can note, hey, that somebody a big entity was selling up here, type of thing, right? Yeah, I mean you could tell by the chart that someone was selling here, but not even balance areas. Not all balance areas are created equal. So we saw, we'll get into this more in the thesis stuff, but we saw the other day in the trade room, we were on the webinar, and we'll get into here and everything else, but this balance area looks like pretty benign, right? It just looks like a small balance area on top of balance. but there was a lot of stuff that was going on in here. Into the close, there was like 9,000 buy ice, and then another the next day, like I think there was 10,000 buy ice. But we also saw some other divergences, like Hero on this particular day would get killed. We'll get into what Hero is and everything else, but and the ES was just spinning in place. So it's like dealers were unloading futures and somebody was absorbing them. And then there was another, I can't remember what the other factor was, but we talked about my thesis. I even went long yesterday in the zone expecting this move, and it happened, right? So point is, most traders don't have this information to know this stuff, and you do, and you can catch those types of moves. So we'll get into that a little more as we go. So anyway, I have,
Stock by NQ, 160 per contract.
and I get some weird buy stops in the middle of nowhere here, but pretty much still in this zone. So I have specific rules. Guys, you got to remember on these Bookmap webinars, there's a lot of new traders
Prior TC short.
most weeks, so I go over basics a lot more. So if I'm redundant, apologies, but I got to do that so people know what I'm talking about, right? So this is the zone drawing tool that is now available that you can get. So I used to draw these by hands. Anyone who's watched any of my webinars and for the last 7 years have endured me drawing these by hand. Now these draw automatically. Whatever populates in the subchart draws automatically. You can combine them like I did here, so on and so forth. So anyway, it's a godsend where I'm not spending half my life drawing zones and inputting spreadsheet values. So I still use the spreadsheet. So this is, the spreadsheet. You can get access to all this here. If you want the spreadsheet, this is my other site, scalpelcitytrader.org. Here's the spreadsheet. Here's the inflection zones. You can get them combined. We'll talk about these as well. But I still use a spreadsheet, but the whole idea of the zone drawing tool, and this is Zone Drawing Tool Pro, so let me just go over this real quick. So if you go to the Bookmap Marketplace, this is the basic one right now. The Pro will be available for purchase here soon. But if you get the basic, I will send you access to the Pro. So you just go to Bookmap Marketplace, go to Indicators, and it's down right there. So this is the basic version. I don't know why this is showing 0. It's kind of strange. I think it's 59 bucks a month. But anyway, you get the basics where it draws the zone and shows you the ATR and the subchart. I can't really show that. There you go. But if you get it, I'll give you access to the Pro, and the Pro is showing you basically everything that's in this spreadsheet, like right on the chart, right? So I'll enter this zone in to just show you how it's the same stuff, but it's showing you, I input the zone prices into the spreadsheet, then it's showing me how much I can trade position-wise based on my risk, right? So I'm risking, these are the Apex accounts, the 5,000, I'm risking 10%. That's way too much if you're trading your own real money. You want to be risking about 2 to 3%. I'm more aggressive with these Apex accounts because I have them per strategy. But anyway, that is showing me how much I can trade based on the zone size and the ATR, which the ATR is average true range. It's basically just showing you the current volatility. And again, if you're getting lost here, you'll understand as we get into this webinar. None of this is rocket science. It's just, you just need to know what you're looking at here. Anyway, the zone drawing, and then it shows you position, and then these other lines up here are actually the reversion trade. So I have 2 types of trades that I do, and what I tell my room all the time, and you guys all the time on the Bookmap webinars, you have to decide what type of trader you are, right? If you are, I've conditioned myself to become a position trader more so because I've made millions of dollars scalping, and that disappeared, right? So that was a long time ago, and it disappeared in like 2005, 2006, and I tried to reinvent my style, and I just was never a elite trader like I was when I was scalping. The point is, I've had, I am mentally built to be a scalper, but in my opinion, you cannot scalp these days based on order book. We'll go over some scalping. So first of all, the reversion trade is more of a scalp trade. That's what I'm getting at, but we'll get into that. But I get emails all the time about scalping off of the dome. This is not it's not possible, in my opinion. Again, if I made millions and millions and millions of dollars trading off the dome, if it was possible, why the hell wouldn't I still be doing it, right? So, not to say that I'm, the best ever, but I was one of the best in the world at one time, right? So if I'm not doing it, it should tell you something about trying to make money, trying to make a living, watching these fleeting orders on the damn depth of market. That's what dome stands for, right? There is ways that you can scalp based on the market pulse algo add-on here. We'll get into that. But what I was getting at, you have to decide what type of trader you are. First and foremost, what you're built to do, because this is all grand to show you these trading strategies, right? So these are all my trading strategies, and for different scenarios and different areas that I deem important, where I look for an area that I think is important, and then I wait for a real-time volume event, aka these zones being drawn, right? But if you don't have the mental aptitude to sit here and watch trades go back and forth, back and forth, back and forth, and it starts going in your favor, and you want to get out right away because you see your P&L taken out, then you have to decide what trader you are. Again, I've conditioned myself to be a longer term trader, and longer term, I'm talking minutes instead of seconds, right? But it's not easy, right? And that's why trading is not easy, because it goes against everything in human nature. Right, so everything you do in trading is basically opposite to what you would do in the real world. Is the bottom line, right? Like watching, if you're trading, you're watching your car payment or your mortgage, you make it and lose it every 10 seconds type of thing, right? Like that just doesn't happen in the real world. So that's why trading is so difficult. Anyway, what I'm getting at is two different types of trades here. We're doing, these are the position trading strategies I just showed you, and then there is a ATR trading strategy that's part of that Beta Pro that you can see on the chart here, right? So you can see these other lines here. So I'll just quickly go over what these lines are so everyone is up to speed. So this is all occurring in this same area, by the way. I'm just going to combine. This all happened here. I normally wouldn't combine this stuff with that stuff, right? And this looks actually small, this bias that's coming in here compared to what happened over here. But this is all in the same area. And what we're looking for with these volume events is basically trap traders, right? So when this came up here earlier, buyers are being really aggressive. They ran into huge sell ice, right? So the sell ice is invested here, the buyers are invested here. When it moves out of here, somebody's going to be wrong. That's what we take advantage of. It's very, very simplistic, but it's the simpler you can make your trading, the better you're going to do. And this is what drives markets, right? It's not squiggly lines on a chart. I know there's lots of lines in this chart, but you got whatever you guys are using to trade, MACD, Bollinger Bands, whatever you think works, that's great, but they're not going to work just because they're on the chart. They're going to work because there's actually activity in these areas that somebody's trying to play it as support or resistance, and somebody meaning the big money, and or retail traders, usually you want to fade. But anyway, this is the area that's really important right now. So we have methods, rules for trading this area depending on how it moves away from this area. So these first lines, this is the ATR line, right? So if this moves, and this is how I've determined after watching millions of these things over the last 7 years, the best way to figure out is this market in a bullish state or a bearish state based on the real-time volume coming in. So if this market's able to hold here and touch this ATR line, the blue line, and it's the same line down here, you can't really see it actually. He has two ATR lines. He has his, and then I think there's some. Let me get this up here.
RTY long validated.
I forget, I can't really find it right now. But anyway, quickly, these lines, this is going to determine whether this is a bullish setup or a bearish setup if it touches the blue line. And that's the same value. I didn't put this in here, but let's just, let me combine these zones first so it won't be confusing. So this is the most recent event here. I'm just going to do this like this and play this zone. It's pretty close to that zone. So I'm going to combine these stops like this. So this is obviously adjustable. These zone drawing here with this ice. So I'll move that up. So the most current event here is 61.75 is the top of the zone to 45.75 is the bottom. Right? So let's just plug this in quickly. I think the ATR is pretty accurate right now, but if the ATR is off on the zone drawing tool, you have to manually enter in these zones to get the correct entries, exits, everything else. So 18661.75. Put the ATR here in a second, and then the bottom of the zone is 18645.75. Whoops, didn't want to do that. 18645.75. These prices are not registering in my head how ridiculously high this market is, but 22.13 is your current ATR. Very important. That's telling me the current volatility. What is that? Average to range for the last 5 minutes. That's what I use. I use the 5-minute Wilders ATR. It's the Thinkorswim default ATR right there. 14 period Wilders, right? So it's basically just showing me the last 14 bars how volatile the market is. So this is telling me that this market is rotating about 22 points every 5 minutes. Very important information, right? What drives the markets is volatility and volume. Period. End of story. Not a line on a chart. Volatility and volume is what drives markets. So I might put that in. Right, so what I was showing you, the ATR, so that would be the validation price, right? So this is showing, for this to become a long setup that just occurred, that buy ice and the stop runs, 18,684 would validate this as a long setup. And you can see, so the ATR is off a little bit here. It's showing 23.71. This is what I'm talking about. So you got to make sure, this is why this is in beta. We'll get this, Johan is the developer who made this drawing tool. He'll get this squared away and get this accurate, right? So you can see this is showing 23.34. It's only 22.13 on Thinkorswim. So these values are going to be a little off. But the point is, if this touches this, then this is a bullish setup, and I will trade accordingly to the upside, potentially. And if it touches this, then it's a bearish setup. That's how I've determined how to judge these volume events that come in. When the market's able to push an ATR away from those areas, that is giving you the sign that that is the direction you want to be focusing on, right? So again, it's not just my, I'm just throwing rules out there. It's from watching so many of these and understanding ATR and volatility and everything else that determines which way I'm going to trade these. So like I said, right now, algo guide. So this is one of my filters for these two trading. The most active trading strategies are the bark and the lick, right? So all these trading strategies are all of them except for the bark and lick are looking for important areas. My important areas, and we'll get into these: the with levels, the inflection zones, market profile composite, highs and lows. So those are important areas. So I'm eyeballing these areas, right? Waiting. So this is what I'm kind of talking about here, right? So say I know I'm sitting here watching this market come back. This is gold, by the way, which I want to get over to because I want to trade definitely on the long side based on it's gapped up huge overnight. Anyway, so say I know these areas are important, which they're very, very important, right? The highs and lows, these are composite value areas. We'll get into this too, potentially, about merging these, but these are days that are merged in the value area. Value area is just 70% of the trade occurred in a day and or days combined. Very, very powerful. Tops and bottoms and the points of control. So you can see this point of control led to that move. So my main trade are the tops and the bottoms. So say I'm watching this top of this market profile composite, it comes down here. I already know that's an important area. Do I just buy there blindly? No, I need a volume event. And then I need a volume event to be bullish, and then I get long. See what I'm saying? So this is a perfect example. Very, very important area. This is a multi-day market profile composite area. The market's true, obviously bullish. You can see this huge gap up, right? Look at this gap up overnight. And this was looking like it should die yesterday, and it didn't. And then then we put in that selling tail, and I still thought I was going to die, and then it just gaps up through everything overnight. But anyway, so if you're looking at this market and you see this gap, you're like, oh my God, yeah, this is, the breakout of all this balance. This thing's going to rip. How many traders just blindly, because they don't have the most important information, the real-time volume, bought right here when it came down there, right? So this is an area I look at too. Did I buy there? No. Why? Because there was not a real-time volume event at an important area for me to go long. So I avoided a loss there. How many traders bought that thinking, oh, it's going to bounce off there and just got killed, right? So this is what this looks like. All right, so on that move back down, there were no volume events to go long. So once again, this is the most important component of markets, what's trading right now. So I avoided a loss there just blindly buying the market profile composite. The point is, this could be, I gotta get over NQ. This could be any area you're looking at. It doesn't mean anything in my humble opinion, and I'm not that humble, unless you get a real-time volume event there. All right, so this is now, you can hear, this is the great thing about the zone, this Scott zones, the Bookmap add-on and the pro version. I could be doing something else and I have no idea that this just validated long, and it posts it and then it reads it off for me. So I just heard, that's why I came over here. So now this is a long setup. Now I can take potentially barks and licks to the long side. Just make sure this is, so what I was getting at, this is my filter for barks and licks. So you can see this trade, and this is we talk about thesis, we'll get into thesis too, where you can trade bigger in a certain direction. Obviously these markets are bullish. This is kind of telling you something. Algo guy pulled to the short side, or we call it algo guy because these are algos. This is exponential moving average ribbon, right? So the blue is the short term, the red, and these are just individual time periods. That's what makes the ribbon. When the blue crosses the red, these algos will jump on and just load up and push it down, right? Well, it crossed, and obviously these algos they just fire off when that happens. It couldn't go lower, and then it crossed back above. That's right there is telling you something that this market may make some more new highs, right? So just one component we talk about all the time. I'm a day trader. I'll trade both ways, but when I get my thesis in the same direction as volume events, I can trade bigger, right? So that's one component of the thesis. So this guy's a little loud here. The other things I look at to come up with my thesis are obviously the structure. Pull this up here. And there's not really anything here structure-wise, right? We've broken out of a whopper balance area. Right? What's a balance area? It's just traders placing bets. Who's right? Who's wrong here? The shorts are not feeling very good, and then that's what leads to that move. That's what markets are, right? So this is just a bigger view of volume and time. Somebody's right, somebody's wrong. It's the exact same thing we're doing with these volume events. That's real time, shorter term stuff. Somebody's right, somebody's wrong. It's the same stuff, right? So anyway, this retest confirm, I'm going to take a bark long because algo guy's bullish. That's this trade here. It's just a blind ATR retest confirm of the volume event. That's all it is. So it could be in the middle, it could be anywhere, right? We just talked about looking for certain important areas. This is just anywhere these things occur. If I get the confirmation, the retest confirm, I'm in. As long as algo guy's in that direction, right? So I got that potentially, and then I'll get into this reversion trade too. And is there liquidity up here? There sure is. So the lick trade, this is my ultimate target, the longer term resting liquidity, and it's probably Nasdaq is probably the number one market where the markets will get to that liquidity usually that day, right? So we saw yesterday on the PM webinar, we got in while I did it while Paul was talking, and there was huge bands of liquidity, 100, 150 points higher, and the market went right there by the close, just because this is the big money, guys. And the longer it's in here, the more they want to get filled, right? Think about it. If something comes out bullish, I mean, I don't know who else could be bullish, but say they find a cure for cancer, and the thing rips right through there. Well, they're obviously willing to get filled, right? So that means this is not they want to sell here because they think the market's going down. I mean, that's potential, but the point is, they don't care if the market rips through them. So these liquidity is a magnet. It's not, oh, look at these sellers up here, I want to get short right here. It's no, look at these sellers up here, the market's going to get there. Why? Because this is the big money, right? This particular order isn't that big, but the point is these guys, they run the show, right? So they play, as I know, all my trading strategies are based on my personal experience as a large scalper. I used to play this exact game. You hear me talk about it all the time. It was in the ES. I would load up 1,000 here. Just pretend this is the ES. It's back when there was 1,000 lots in the books where you can trade 1,000 lots and get out if you're wrong, so on and so forth. But I would get, I put offers in here, right? Well, let's just use the ES for an example. Make it more realistic for you. And there hasn't been any setups here in ES today. So I would just load up the order book here like this, 1,000, 1,000, 1,000, and then I would start testing the water. I'd buy some, right? So pretend my orders are up here. This liquidity is me, right? And I'd buy some, and the market would kind of rip up, and I'm like, all right, no sellers. I buy some more. Market would rip up, and then as it got closer to my resting orders, aka liquidity, this is just showing you this on a heat map. That's all it is. Then I would just step on the gas. Any bullets I still had left, remember I have like 2,000 up here working, right? 2,000 offers. I would just step on the gas with everything I have, and then the retail traders would see this activity. Oh man, someone's buying. They jump on my coattails, and it would run it right into my offer, and I'm out of the trade. Make 20, 30, 40 grand or whatever it was, and I'm out of the trade. Then everyone else is left holding the bag, right? So that's what's going on in here so many times. You're not back then. You can spoof and everything else. I was spoofing. Spoofing is when you put in an order. You don't actually intend it to be filled. Sometimes I did, right? But say a perfect example was spoofing. So I had the 2,000 up here, right? And it would get real close, and I'd buy here, and then it wouldn't quite get to the orders. I would put 1,000 lot on the bid to kind of scare the market into even though I didn't want more on, I was trying to, without trading it, I would try to scare the market because, it's just common sense. Retail traders see, here's a retest by the way, they see that big bid come in and they try to front run it and they run it right into the order, right? And I didn't really intend for that to get filled. That's what spoofing is. Back then it was completely legal and I played the game as the rules permitted, right? Nowadays it's illegal. I'm doing air quotes. They're still doing the same game, right? They're just doing it more covertly, whatever the word is. But the point is, if you understand the game, you're ahead of the crowd, right? That's the point. And this is showing you the game in all aspects. You can see what the big money's doing. You can see what the retail trader's doing. You can see where the liquidity is, what the big money, where the market's very likely to go, so on and so forth. It is the information to have edge in futures trading. All right, so so this is just textbook, right? So we have a trade. Remember I was talking about the shorter term trades? This was the 1 ATR, and you can see this dotted line on the chart. So that was the 1 ATR reversion trade where we actually have a trade, and this is more of a scalper's mentality where you trade. There's a natural gas number just came out. Just to move back to the zone. Again, this is just from my observation of watching millions of these things, that the propensity for these things to come back to the zone is insane. And we actually have a trade for it now. So with the zone drawing tool, you get the 1 ATR, you get the 2 ATR, you get the 3 ATR. That's the dotted line. The dashed line is the stop price for that. And we're going to have, going forward, a new version, Johan's going to have where you just hover over this and it populates. See how you see these lines for the ATR and the entry lines? That's the yellow line. That's for the position trading. Well, for the reversion trades, you'll just hover over this and it'll show you you can see it down there in the bottom left, right? So if I wanted to get in the short reversion right now, the 2 ATR reversion, you can see down there I'd be entering it at 1706 or 70. I'm sorry, what was that? That was 18706, and then my stop is this dashed dotted line here, and that the stop for the reversion 2 trade is 36. So that's basically all in this spreadsheet as well, right? It's just showing you on the chart. So again, this part of the spreadsheet. Right, so the 2 ATR short would be, again, it's a little different because the ATR is changing, but 1701.50, I stop out there. The 1 was there, and the 1 worked perfectly. So you'll have access to that in the pro version. So if you buy the basic, I get, you can send me an email if you want it right away. If not, I usually get a report at the end of the night, and then I send out an email giving you instructions for the pro. All right, so here's your retest. Nothing has occurred. So I'm waiting. So I'm still not long, right? Because I have specific rules. I didn't just get long here where I said, oh, look at that. There's buy. This is actually the 6th wonder of the world, my 6th setup. It's Step Bros, where you get buy stops with buy ice. That's inherently very bullish, right? Did you see me get long low? No, because I'm waiting for a pattern to occur. That happens all the time for me to get in this trade. So I need to see the ATR, which we got. I need to see the retest of the zone, which we got. Then I needed to move back out, and that's where I get in, right? So many traders are like, "What? I don't want to wait. That's 25 points away. I don't want to get in there. I want to cut my risk down." You can get in wherever you want. These are my rules for these zones from watching so many of them. If you watch 4.2 million of them and you decide, hey, I just want to enter right in the zone because I'm bullish, you be my guest. Do whatever you want. You still have an edge. But I have figured out from trading so many of these, the best edge is to wait for it to push away from this area because you don't know. And so many traders want to do this too. So it does confirm they have a variation where they're like, okay, yeah, I got to the ATR. Here we are back in the zone. I want to go long right here instead of waiting. Well, fine, but then you risk that happening, which happens all the time. We actually have a trade set up that's coming out. That'll be the 7th wonder of the world, hot knife through butter. This isn't the exact components of it, but the point is, I don't get in. Trust me, I used to get in here. Do you think I like waiting for 30 plus? This is actually 45 points away for the entry. I would prefer to get in right here, but I learned my lesson of just jumping in when it comes back and then watching it do that. So I want to see this area hold, and then I get in, right? And then not only that, I don't put my stop right there. I put my stop. I'll get in here, and these are these yellow lines. I put my stop all the way. I force this market so I don't get algoed. And everybody knows what I'm talking about if you trade. It's that algos are 90% of the trade in here, 85, 90%. When nothing's going on, I force these markets to push all the way through, back the ATR, through the volume event, another ATR, and then I say uncle, right? So I'm giving myself room for the games. If you want to get in here and you think you can get in here and stop out here and you think you can be successful doing that, good luck. Right? Because algos are the main game in here. And they want traders to do that because they know when big money's not in here, which nothing's going on, that's when they start doing this to you. So I avoid that the best I can with my rules. And it's literally that simple. I gotta take a breath here. So anyway, I will, if this comes back, I'm going to take a long. If this touches this ATR line, this whole area for me, the way I trade, this is disqualified. I can't go long because it touched the ATR below. Gone over that. And I can't go short because it touched the ATR above. It happens sometimes. Doesn't happen that often where you get both sides and it disqualifies, right? But in this case, I would do nothing on this event and I wait for a new event. That's why you want to be watching multiple markets, right? So when trade sucks, like the trade has absolutely sucked in these markets for, I mean, I got back from, I was on vacation last week. That's why there was no webinar. But I got back on Tuesday and I put on a long in ES and it was like the biggest torture treatment. It was like a 4-hour long. It was brutal, right? So the point is, when you're getting tortured, you don't have to sit here and stare at the same markets. All this stuff, you see these drawing in all these different markets, right? I don't care what market, futures market you're talking about, as long as you know the thresholds, and you don't even need to know the thresholds anymore because they're on the drawing tool. If you get the drawing tool, as long as you get these volume events. What am I looking for here? Hold on. Why can't I find my main page? Oh, because I did a copy, instrument copy. We'll talk about that. The point is, I'm watching 20 different futures markets, and now I can hear when the stuff fires off. Right? It's all on here too. You see the pop-ups, but you get it all here. So, like, there was just stuff in CL. I didn't even hear this. Right? The point is, stop pigeonholing yourself into one or two markets. It's all the same stuff. If you have the thresholds, it's the same rules. I can go through all these markets, and you can see the drawing tools firing off in all of them. As long as you have your, and this is showing you the risk and how much you can put on, so on and so forth. It's awesome. Why is this not doing anything? Here we go. So that's silver. There was some bond stop. I didn't get over to any of this earlier, but you had a bond stop and hold here. Stop run that held. It's starting to come back. Surprise, surprise. That's the ATR trade. Yeah, let's see if there's anything. Nothing in wheat. Nothing in beans, I don't think. I know there was stuff in copper, right? So it's like you guys are probably rolling your eyes at these products, and you're making a mistake because the money's just agreed in these products as the other products, right? And if you know that there you go. This is a perfect example. I didn't take this trade obviously because I've been chirping, but there's your ATR. I don't know if we've talked about this pattern. Retest of the zone, you get in there, and then your stops up here, right? This would have been a trade too because I'm pretty sure Algo guy is bearish. I just didn't, like I said, I didn't take this trade. This is definitely a trade to the short side I could have taken, right? This is for the bark and the lick. I could still pretty much get in this. I don't really want to monitor a copper trade during this webinar, and you can see there's liquidity down here too. So you could definitely trade copper. That's what I'm trying to get at. Speaking of which, other markets. Actually, let's just quickly see. I just want to see what happened in crude. Crude's about to be destroyed, in my opinion. Not destroyed, but my thesis is about to be very bearish here. And here we go. So let's just go over this, and I'll show you Bitcoin yesterday, which I pointed out to the room, and it led to like a $6,000 move overnight. So this market is short-term trouble. We talked about this at length in my room yesterday. You have balance, you have a breakout, and you can see there's a tons of zones up here based on prior stuff. Held these zones, came back, and then yesterday, so this in basic market structure parlance, right? It comes back. If this market's truly bullish, it should hold this high volume node at the minimum. Sometimes it comes back to the top of the balance area and then rips. Last stand, as far as short term, is this high volume node, and you can see it tried its damnedest to hold there, and now what's happening? It's breaking down out of current balance through the high volume node of prior balance. This looks like this is coming back to this stuff, right? It's already at the top of this, but I can see because now you got a bunch of invested traders. We've talked about this at length already today, right? Now there's enough energy here that when these longs puke, this is very likely to make a move back to the high volume node of this, right? So my thesis right now is based on what's happening, bearish. I will still, so say it comes down to here, would I take a long, even though I'm bearish? Sure would. I'm a day trader, right? If I get my components and my volume events, so on and so forth. But if I get like this setup that just happened, we'll look at this. If this turns out to be a bearish setup, I'm going to trade double size based on my thesis. This is just one thing I make a thesis off of is the bar chart. Algo guy's bearish as well. This is another example of, we just talked about this in NASDAQ. Market tried to pull algo guy above, couldn't hold it, gets back below, bye-bye, right? So that's bearish. That thesis is bearish. Then what else do I look at? Excuse me. Hold on one second, guys. All right. I look at gold's near the blue. Hold on, guys. I can't clear my throat. All right, struggling over here. That's what happens when you talk nonstop for 45 minutes. So there's my other, this is what else I use to come up with a thesis. So this was just a single day. This was a market profile composite, and you can see how the market respected. This is what we're talking about, how important these areas are, right? So this was yesterday. So you can see it tried to get out of here, tried to get out, couldn't get out, got back in, covers the whole length of it. That's the tendency. And then held. So this is a perfect example. So you say yesterday it came down here, and I think I just had to run out. But if there was a volume event here that was bullish, I would have taken that trade as a pick trade, right? That's this trading strategy right here. So it's once again, it's looking for an important area and waiting for the volume event. But anyway, that held yesterday, and what do you see now? This is breaking down. This is the same view of the bar charts. It's just, it's a different view of the same thing technically, right? All right, anyway, that's breaking down out of there. So I will, the only caveat here is these are lovely levels, right? And actually I need to post this. Dan, if you're on here, can you, because this did not let me post, can you post this, I'll go over this too. Could you post this in the YouTube channel? Because it wasn't letting me post last time. Let me try. I'll try right now, but I don't think it's going to let me. I don't think that, let me know if you guys can see that post, if you can click on that document. I don't think it's posting because it wouldn't let me post last week. I think Dan from Bookmap has to do it. Anyway, let's see what this is. All right, so for me, there's nothing to do off of this setup. We just talked about this. Why? Because it was initially, you got your Dumb and Dumber stop run. It did confirm as a bullish setup and came back. This is exactly what I was talking about, right? So you're like, yeah, I don't want to. Okay, here's your retest. I'm getting it in the zone. You get in the zone and you get killed, right? That's why I would have waited for that. That didn't happen. This is below this at an ATR, but I can't take this short no matter what happens off of this event because for me, because it disqualified to the upside. That's how I trade them. If you say I don't care, it got to the ATR on the upside. This is proven bearish. I want to go short. be my guest. I've seen so many of these. This one's disqualified. Trust me, there's another one right around the corner. This starts moving down, especially what we're looking at with all that structure. You're gonna get another stop run, and then you can follow the rules. I can follow the rules. I can trade double size. So, bottom line, there's nothing for me to do here. Let's go back to NASDAQ. It's very quiet in here. I gotta get tick strike rolling. We'll go over this stuff too. All right, we finally got a event. Yes, just fired off right there. I'll come back to that. Anyway, so remember I said there's nothing for me to do now here anyway. It's confirmed to the upside, confirmed to the downside. This whole area for me, tradable, is off the table. So nothing for me in NASDAQ. Big deal. There's another setup right around the corner. Let's move to another market. Yes is, I think I just heard a yes. Yeah, so it's still coming in. That's why it hasn't drawn yet. So you got buy ice coming in here. So the first step is to figure out the zone. Then you can see all the liquidity above here. I wonder if that's going to get filled today. It'll probably get filled while we're on the webinar, because that's how these markets work. Algo guy's bullish, so I can bark some licks to the long side or in play. There's your zone. Obviously, all-time highs. I mean, it's just insanity. It just keeps going up. There's nothing wrong in the world, so just keep buying it. There you go. So there's nothing really here as far as potential shorts for me. Let's see if we're near a Ludwig level. I'll go over all the things that I use. I always get questions about what I use in my trading and how much everything costs. So Ludwig level is all the way up here at 34. I mean, you could see this ridiculous gap up to. So there's nothing for me personally to take shorts off of. If this event turns out to be a bearish event, I can't go short because there's nothing up here. There's no zones. Some guy was making mouthwash in my room today. He actually said this. It's pretty funny. He said because we're at all-time highs, so there's no inflection zones. Right? He said, what do you say here? I'd like to ask for a moment of silence for the Izzy short trades on ES. Because there's no Izzy zones up here, right? So there will be eventually, but once stuff starts to materialize up here. But point is, there's nothing for me shorter. So the only thing on the table for me on this volume event potentially are bark and lick longs. So for me, I need to see the ATR touched. I need to see the retest. Then I will go long. Can you go long the first move out of here? You can do whatever you want to do. I demand that pattern because I've seen so many of them, and it's just a better confirmation that the area is valid, right? You could say, this is good enough for me. This market is going to go up another 500 points. I'm going long right when it breaks out of here. I'm going to follow your ATR rule, your entry rule, but I don't need to see that. And some days it doesn't retest. It doesn't happen very often, but sometimes it does. I do have another trading strategy that's going to be coming out. Like if you see the market moving up and you see high relative volume and you see the iceberg in that same direction, so this would be a good example, right? So the market's ripping, you see buy ice. As it moves out of here, if there's really high relative volume, you can buy it first move out and not wait for the retest. Because a lot of times on these trending markets, like we've seen it in gold and many, like that big move in gold a couple weeks ago was the same thing, where as it moved up, the bias was coming in and they just will not retest the zones, right? That's like on a trending day. The component for that is you need to see heavy relative volume, right? So the relative volume just means, so this is the relative volume I use, and you can see this almost got there right now. So this is showing me the exact time period, percentage of volume coming in for the last 30 days. So I know at 940, this volume coming in is almost 2 times normal, right? So that's when it will turn yellow like this. So you can see, like on a day like yesterday, and this is what led to this move, right? There you go. So this is big money coming in. It's all the same stuff, guys, right? That's the line in the sand. What huge volume coming in. I mean, this was like, what, more than 5 times volume? Yeah. Just consistently, right? This was during the Fed stuff, right? The interest rate and then Powell. So what do you think's happening here? Well, they're buying it. Somebody's on the other side of the trade, aka sellers, responsive sellers, passive sellers. They're wrong. Let me out. Same principles, right? So this is just another way of looking at it. But I love this type of relative volume. I don't like the think or swim relative volume because it's showing me, this relative volume is just showing me the last 60 bars, See this? This is not the same. This is showing every day. It'll show the open as 7 to 8 times normal volume. This one was 6 times normal volume. Does that mean it's huge volume? No. Relatively overnight, it's basing it on, and you can see there was some action overnight. That's why this wasn't quite 7 or 8 times. But I don't care about overnight trade. So it's going back 60 bars. That's not the relative volume I want to see. I want to see, hey, is this for this time of day? Is this a lot of volume coming in? That gives you a huge clue on what's going on as far as the big money playing, so on and so forth. So anyway, this last bar was close to 2 to 1. Probably 170%. I'm not going to, actually it was right here. I'm not going to do, again, this is a new trade that I will introduce here soon. But for me, just my traditional trade here, I'm going to take a bark and a lick if it does that pattern. So now we just sit here and wait. I just wait to see what happens off of this volume event. Let's make sure the ATR is correct here. So this ATR is showing me 4.07. This is showing me 3.92. It's pretty close, but I don't want pretty close. We've seen, you guys have seen all these webinars I've done. I get filled to the tick or stop to the tick. It makes a difference because those algos are set to the current ATR, a lot of these algos. So this one I'm going to plug in the spreadsheet, right? 53, 20, 50 to 1775. So again, you can get this spreadsheet on this site. Actually, let's just use this because this is what most people are seeing. What am I doing here? So good little review. So you come in here and you put in current ATR, which is 3.94. Put the top of the zone in. 53, 20, 50. And the zone and the chart stuff is going to be pretty similar. We'll look at that, but it's going to be off a little bit, right? So that's why I'm entering in the spreadsheet. 53, 17, 75. And then you got to plug in your account size. So I'm using the 5,000 Apex at 10%. We'll get into that too. All right, so these are my values. They should be pretty close on the spreadsheet. I mean, on the heat map. So my validation price to make this a long setup, the market needs to touch 24.50. So that's this price. So actually it's right. So you can see it right here going across the screens. So it's close enough that it's giving me the same exact values. There's your ATR, 24.50. So I'd wait for that to confirm this volume event. Then I'd wait for a retest. That's this line. That's 10% of an ATR. That just tells me that's close enough to this zone. It doesn't have to actually touch the zone if it's within 10%. So I'd have to wait for that, wait for that. So this price is in there too, 20.50. Retest price, well, it's 21 because again the ATR is off a little bit. 21 is the retest price. I don't know why that would be that much bigger, but anyway, then I would enter at this yellow line. That's where it says long aggressive. That's where I enter. 25.25 entry price. So again, it's off a tick because the ATR is off. This is the real ATR, so I would be entering at 25, and then my stop goes at 13.25. So in this particular trade, I'm risking almost 12 points to trade it, right? And you guys, I can just feel the eye rolling when I say risking 12 points. When I trade the ES, I want to risk 2 points and make 5. Like, great. The market doesn't give a flying what you want to risk and what you want to lose. The market cares about volume events and volatility. So if I'm going to get in this trade, I'm getting in there and my stop's going all the way down there, right? Because I then avoid the best I can that, which is all that happens in this market 85, 90+% of the time, right? So for me to be wrong, so if this does happen and it's just sitting here doing nothing, I'm in there, I'm forcing this to come back to full ATR, get through the volume event, push out another ATR, then I say I'm wrong, right? So yeah, when you put on trades that are 12 points, you want to have at least some kind of, profit target where you think it's going to move at least 12 points. Well, I know based on the volume event, because this is heavy, this is loaded up traders, I know based on the ATR and so on and so forth, the minimum this should move out of here, if I'm right, is at least 12 points. Then I have areas, okay, this is all, if I get in the trade, I'm not in the trade yet, and then I'll watch, there's really no areas here except for the lugs. So if I get in this trade, right, so this is happening right now, there's your volume event, just sitting in this zone. If I get in this trade, that's my target. So I'm risking, so I'll be in at, this is basically just going to be a 1-to-1 trade, right? I'll be in at basically 20, what is that, 25 quarter, or 25 it was. And I'd be pretty much out at the red lug. And we'll get into what these are in a second. So that's actually less than a 1-to-1 trade. But I'm okay with that, right? So I just laugh at traders. Again, I don't laugh at traders because it's a valid point, right? When you put on trades, you want the appropriate risk reward, right? So you're not going to make it as a trader if you're putting on trades where you're risking 2 to make 1, right? Or to make 1. That overall, over the long run, you're probably not going to make it, right? But even though I want 3 on my trades, what does that mean? Okay, so I get in that say this occurs, and I'm like, okay, I'm risking 13 points. I got to get 40 points out of this trade for it to be a 3-yard trade, right? I'm risking 13 to make 40 or 39, whatever, 13 times 3, right? Okay, what does that mean? That's just in your mind what you want out of the trade. That doesn't mean I don't just sit in trades till I get 3R. This would be, if I get in this trade based on my risk, this is a very important area for me. Does that mean I just ignore this important area because I want 3R and I'm just going to hold it? You could, over the long run, if you demand 3R on every or more on every trade that you take, and you're willing to ignore important areas and watch it bounce back and come back 30 points on you, be my guest, right? But I won't get out of, on the lugs I get out of the full trade, but say this was like, say I got long an event in here, right? And it did one of these, and it came up to point of control. And that was confluent with something else, like say VWAP. Well, I'll get out of, say I had 10 on, I'll get out of 3 there. And then if it comes up to the market profile high, composite high, I'll get out of another 3 there, right? I won't get out of my full trade until I hit one of the most important areas, and that's the Ludwig levels. So my ultimate target is that. Then I'll get out of the full trade. But on the way up to wherever it's going, I will get out in important areas if the market struggles to get through. How do you determine that? Well, there's multiple ways you can determine. And again, we have no trades on, so it's hard to really judge right now, but I'll just give you some examples here. So Bookmap now has, they have Market Pulse, right? So Market Pulse is basically this. So this is, let's just go over this real quick, everything I'm using, and then it's easier for you to follow what I'm doing here. And then if you have questions, throw them in the YouTube channel, please. All right, so quickly, there's nothing going on, guys, so we got time to do all this stuff. So drawing tool. I already went over this. Did Dan post this in the YouTube channel, by the way? Yeah, he did. Cool. Thank you, Dan. Here's a drawing tool. Get it at the market. If you get it, send me an email. If not, I'll see you at the end of the night, and I'll send you the pro beta that we've been talking about this entire time. Here's my indicator course. So this is the crux of my trading, right? This talks about, this goes over these volume events, how you trade them, how you draw them. And again, you don't even need to draw them anymore if you have the drawing tool. But this is the add-ons, the settings, the thresholds, right? There's the settings for all these, the sweeps, the on-chart, the sub-chart, everything else. And then how to draw the zones if you want to do it manually, right? Then we get into the setups. This is the core of my trading. These setups are the volume events, and I have distinct, funny, memorable names for each of them. They make me laugh anyway, so... right? So these are distinct things that happen in the market. These are all based on my experience as a large trader and how I would react when I was right, when I was wrong. And I can see how other big traders would react when they were right, when they were wrong. Back then you could see counterparties, so I could see exactly what everybody was doing, whether it was a guy I traded against every day, 100 times a day, or an entity that I've never seen before. You can see the house number, right? So my nemesis, and you can Google this clown, 990. I'm not even going to get into this rant. Biggest spoofer, manipulator, cheater of all time, right? This was the firm. I'm not going to get into the firm. You can look it up. That's who I would trade against every day, head to head, right? And I could see every time I put a market order in, I just look at my, back then I have a little screen. It would show me counterparty. So I would sell 1,000. It would show sell 1,000, and over here it would say 990. And I know he took every one of those orders. That's important information, right? It's like playing a poker game. I'm like, okay, he's just absorbed all those orders. Then I'd sell another 1,000, still 990. I'm like, all right, now he's long 2,000 contracts. you better hope this goes up or he's gonna be in trouble. And if I know he was in trouble and I see someone coming in behind me and helping me out, like say paper came in and selling, then I would just step on the gas and you just see, and then all of a sudden you wouldn't see 990 anymore. That's how I would know he was loaded up. And then I would just do my best to push it down and then watch him puke it out. So that was the advantage, obviously, of a counterparty. And shockingly, they did away with it because the big money didn't want people to see what they were doing, right? But back then, you can see it. So the point is, these setups were based on what I observed as a large scalper and watching large traders trade, right? So these are all the setups. So you learn the setups, then you learn to incorporate these setups at any area that you deem important. These are my areas, like I said. Right? You can use my areas. You come to my trade room. You learn. I talk about these every day on the live webinars. Or you say, hey, those are great, but I got my own. But I want to learn these setups at your important areas. And that's it. And then this is about the ATR, the advanced trading of zones, when you combine them, so on and so forth. And this is my smiling face at the end of the video. This is worth the course cost right there, just to be able to see me live or recording. Just kidding. What else was I? Oh, let's go back to this sheet real quick. Really good trade, by the way, today. Not. I already showed you this. This is if you want the spreadsheet and Izzy zones. So here's another thing too. I'll show you this quickly. So these Izzy zones right now, you get them for free. So you get the spreadsheet and the Izzy zones for free in my room. If you can't get in the room, you can still get the stuff via subscription. So in my room, I post these charts every day. These are the Izzy zones, right? So you get in here and these are important areas. So you can sit here and just be an Izzy zone trader and say, I only take trades with volume events and inflection zones. Right there alone, you can make a living off of that, right? You got to be very patient, but they're nonstop if you have to watch multiple markets, right? What was I getting at there? I forgot what I was getting. Oh, so you get these zones in my room. If you can't get in there, like I said, you can get the subscription. But what's coming out, the incredible developer, Johan, who's developed the drawing tool, has come up with a way. I'll show you this here. So a NinjaTrader, I don't know the specifics on this yet, but this is what it's going to look like, right? Because I keep getting, could you import this into a spreadsheet? Could you import the zone prices into a spreadsheet so I can put them on my Bookmap? It just takes me too long. I've got to sit there and draw the zones in the morning, and then I would have to transfer the zone because it changes zones all the time. Actually, I didn't want that to play. So the point is I can't do that. This is the next best thing, and this is what's coming. So I don't know if you're going to need, I don't think you're going to need NinjaTrader. I'm not sure yet, but he has this set up for NinjaTrader. So if I draw the zones in NinjaTrader, and you're going to see him draw it, if I draw the zones in NinjaTrader, it's going to populate on Bookmap. So you'll be able to see the Izzy zones on Bookmap, and this is what it'll look like, right? This is obviously very crude, very new. So there's the zones. So say that's me drawing the zones, and then you have your Bookmap connected to it, and then watch what happens. Right there. So you'll see both of these here in a second. Right? So there you go. So you won't even need the charts, so to speak. And then you can then here's the zones. So now you're watching the market. You get a volume event right there. Oh, that's a short. See what I'm saying? It comes back down here. Oh, that's long. That's an important area. So that's coming. But right now, old style, old school. Hold on. What is this guy talking about? All right. Well, first of all, we might have a trade. I know that's crazy talk here. This looks like it's going to be a slug in gold. So gold is obviously, look at this move back down though. Wow. All these longs feeling pretty good. This is another thesis, right? So we've been talking about this entire time, these Izzy zones. Very important zones. Especially if this market's truly bullish, this should be at least pausing in these things. This is melting right through these zones. This is probably coming all the way back to here. If this gets back through this thing is going to get it should get absolutely destroyed. Again, just my opinion, but based on what's going on, this is not help. Like what is this? Like this thing gaps up that much overnight and it's coming all the way back. But that's fine. Here we go. Is this an important area? Sure is. This is an Izzy zone, and I think this is a lug. Thank you, Madam Shizzle, because she pointed that out. She's in my trade room. Awesome. Right here. So here we are. So this is ripping through the lug. That's telling you something too. So as long as we don't form new lugs here, So if this area holds, I'm going to take an Izzy long, right there, Izzy zone, right? And these are the best Izzy's moves, straight moves. I know these melted through, but there was no long setups for me. This is another example, guys. Great. How many traders say they have these exact zones? They're like, oh man, this thing gapped up. I can't wait for a pullback. I'm going long. Killed. Oh wait, here we go. I'm going to take this zone. Kill. Right? It's not just the important area. It's waiting for a real-time volume event in that important area. I didn't get long in either of these zones because there was no long setup. Right? That's the key. I use what's happening real time. So they tried to buy this thing here, right? Buy ice came in. How did they do? That actually turned out to be a broken ice setup and never retested. But the point is, even the buy ice couldn't hold that market up, and I didn't go long, even in my important areas. So here we are with the stop run, aka Dumb and Dumber, right here. Where's that? Right here. Dumb and Dumber, the first setup. It's a fade trade setup. So it's just the dumb money puke, the retail trader. Again, don't be offended. I'm a retail trader too nowadays. So here's your puke into an important area. As long as this doesn't violate to the downside, I'm going to take a long off of this setup. Very scary, right? Like, oh my God, the thing's getting killed. What are you talking about? Well, then this market shouldn't prove bullish, or this zone shouldn't prove bullish if it's going to continue lower. And it very well could. You can see it and you can hear this tick strike. They're still hammering this thing. That's great. Could I take a short off of this? Absolutely. Algo guy is clearly bearish. I mean, nuts bearish. Look at that. Right? So what's on the table here? I have different trading strategies for what happens at this zone. If this holds, I'm going to take a long slug. It's a stop run into the major lugs. We'll go over the levels in a second. And an Izzy. We just looked at the Izzy zone. And those are both aggressive trades. I'm taking them first move out. I'm not waiting for the retest. Those are my rules for that. On the flip side, if this proves to be a bearish setup, aka it's the ATR line, I can take barks and licks to the downside, right? Let's see if there's liquidity down here. I'm sure there is. There you go. All right, so there's 4 different trading strategies at play here. 2 on the long side, 2 on the short side. I don't know what I'm doing yet. I wait to see my rules to take the trade. And you see that liquidity down there. So I am watching this closely. I want to get my aggressive orders in case this thing rips up. So the first thing I have to trade or check is ATR is showing at 38.5, which is pretty large. That just means it's rotating close to 40 ticks every 5 minutes. This is showing at 3.76, so almost right on. So I can use the values on this chart. So if this holds and doesn't tag this line, which it may right now, but if it doesn't, I can take a long at that price, and here's my size. I can put on 5. That's all based on the volatility, the size of the zone, so on and so forth. So I can put on Izzy long 5 micros. This is showing. So guys, I got an email about this last night. They're like, could you find a way to show it as micros versus the regular, because this is showing you the regular size E-mini product, right? So this is saying I could put on half of a gold product. You obviously can't the full contract. Guys, you just times it times 10, right? So if it's showing 0.5 times 10 will give you the micro. That means I can put on 5 micros. That's all you got to do. We're not going to have a separate thing for micros. Just use your math skills and times it times 10, right? So if this comes out of here, I'm going long 5 Izzy's at 2180.01 and 5 slugs at 80.01. Other than that, if this confirms the downside, I'm put on barks and licks, the same size, and this is my entry down here. So we'll see what happens here. I'll give this a second before I put those orders in. So that's that, and that's how I do it. I'm just looking for important areas. Actually, let's check out ES here, because I know how much you guys love to watch this market. All right, this is confirmed as a bearish setup, but for my rules, there's nothing to short up here. We already went over that. There's no Ludwig level. There's no market profile composite. Those are usually my aggressive shorts. There's nothing for me because we're at all-time highs. I can't take barks and licks off this either because the algo guy is bullish. This is my filter. Does that mean you have to follow that? No. If you love a short here and you say that enough's enough, this is broken ice on top of it. This market's moved too far, too fast. This is ridiculous. The big money can't even hold this market. I'm taking the short off of that. I don't need algo guy in my direction. Fine. Guys, this is what I do. So when you come in my room, it is not a room where you are, I am telling you where to buy and where to sell. I'm showing you where I am buying and selling. But that is not the point of the room. The point of the room is to teach you how to do it for yourself. You are never going to make a living trading if you are following somebody else's direction, right? The idea is to come up with these on your own. Yes, you can follow mine. Absolutely. That's the whole point, right? These are what I deem important. But if you don't like these areas that I'm using, use your own. And you come up with your own trade plan. All right, so we just heard GC short validated. So it touched the ATR line. So I didn't even put these in. So the bark or the Izzy and the slug trade I was going to take aggressively long are off the table. Now the bark and the lick are on the table. So it's going to tell me when it comes back there. It's not on this screen, it's on another screen. But it's going to tell me when it comes back, and then I'm going to short gold. And yeah, it's scary, right? It's like, wow, this thing's moved so far, so fast. How much further are going to go? I don't care. That's not part of my, I have no idea. This thing, that's where you can get into big trouble. Oh, this has gone far enough. I'm buying. This thing can go another 1,000 ticks, right? So if I get a bullish setup, or if I get a bearish setup, which I did, I'm taking the short. If it adheres to my rules, which it's doing. All right, I gotta take a quick breath. See if you guys got some questions. What software? White Striker said, so you're getting the long at originally 684, the new yellow ATR. The yellow line is not ATR. The yellow line is actually where you would enter the trade. Right, so I'm just showing you this. We didn't do anything here in NAS. I haven't done anything yet at all on this live trading webinar with no live trades. Guys, this is part of trading, right? When there's nothing there, you don't force trades. You can, but you're not going to be along very long. Be around very long, I should say. Anyway, this is the entry, which is just outside of an ATR, right? The blue line is the actual ATR. That's how I determine what the setup is. We already went over this. It touched that one and that one. This is a no-go for me, the way I trade, right? You guys, it is not a big deal. There's another one. Trust me, this market starts actually moving, you're going to get another setup. Let's see. What software were the yellow volume bars on? You're talking about the relative volume? That's just Sierra chart. That's their relative volume. That's the one I use. So this stuff, and they have it like I don't know, other trading platforms have it too. I wouldn't use one that doesn't have it. This is telling me the exact time period. That's what I want to see for I set mine for 30 days. You can set it for a week. You can set it for a year, right? So it's telling me the last 30 days, this bar at 825 or whatever this was almost 3 times normal volume. Very important. What happened there? So, right. So this is the same concept. Obviously, they were buying it here, big volume. Someone's on the other side of the trade. How'd those buyers work out? And you can see and this is the same pattern in this view, right? Here's your line in the sand. That's that. Moves away, retest, fails. What is a retest failure? A retest failure is just whoever, and it's probably going to happen here. And here's your reversion trade, by the way. I probably could have taken this on the webinar. Here's your 1 ATR entry, play for the zone, and here's your stop. But the point is, whoever's long here, so say someone, I mean, there was obviously some buy ice here, but say it's buy ice or retail trade or whatever. When say it's you. You say you just started a trading firm, they gave you 1,000 to buy, and you bought them here. How are you feeling right here? You feeling really good? You're holding your breath. You're about to puke. Say, okay, if this trade's 09, I'm out. Other than that, you're just praying literally to the Lord that it comes back. And what are you going to do when it comes back? Because you're like, oh, this shouldn't have done that. What do? You get out of the trade. That's the idea behind that. And it happens non-stop. It's just basic. It's so simplistic, and that's why it's so valid, right? It's just traders in this area that hold their breath, that don't stop out, and it comes back, and they're like, oh, thank God I'm out. Why? How do I know that? Because that's what I used to do. This is me. This was me. I'm in here, and I'm like, holy crap, this is not... And I got my phone ringing, my wristband. This is when I was at my trading firm. Then I got the phone ringing. Hey, man, you're down 140 grand. What are you doing here? I'm like... Then I would lose my mind. I'm like, dude, I'm in this trade, and you're calling me. I see what I'm down. I have my P&L right here. I can see what I'm down. I'd hang up the phone. Right, and then it would move a little lower. Then he'd call again. It's their job. Don't get me wrong. But the point is, I'm panicking. I'm about to hit the puke button because I'm down 140 grand or whatever it was, And I'm saying, please, God, I promise I'll never do this again. I'll never hold this trade again. Just come back. It comes back, and I'm like, oh, and I get out. That's the pattern. What do you think this stuff is? And it's over and over and over and over. And if you just make it simple, you will be such a better trader. Loaded up traders. Wrong. Comes back. Oh, please let me out. There you go. It doesn't have to be more complicated than that. I'm telling you, the simpler you can make your trading, the better you're going to do. And it's all based on volume and what's going on in real time. All right, so we got new lugs here. This is actually, I think, a retest here. Oh, surprise, surprise. I don't know if you guys have seen this pattern. Here we go. Here's your retest. Look at that. And look at the ATR trade. Remember I talked about the scalping ATR trade? There's your reversion right there. It just happens non-stop. Anyway, here's your 1 ATR. Your stop was down there, wherever that line was. It's the dashed dotted line. You're not even close to a stop. Way down here. Back to the zone. You're up. That is this trade. Again, if you like the scalp, then focus on the reversion trades. I think I put the zone in, right? So you would have been in long at 39. I think this is correct. It's going to be off a little bit. No, that's not the right zone. Hold on. 2175. Let's just put it in just so I can show it on the spreadsheet. Oh, wait. Did I put it in? No, sorry. 2175. I want to do this anyway because if it comes back, I'm going short. And I want to make sure I think the ATR is off in here. So I got to put it in this spreadsheet. 2175.5, top of the zone, bottom of the zone, 2174.9. 2174.9. ATR is 3.84. Dummy alert. 3.84. All right, so that one ATR was showing at 14. Again, it might be a little different because the ATR. Yep, pretty close. So this is showing you what's in the spreadsheet, like I said, right? So if you don't have the drawing tool, you just use this. You're like, okay, I want to get in the 1 ATR. My entry's at 14. My stop's at 68. I'm out at the zone. There you go. ATR almost to the tick. You took about four ticks of heat right back to the zone. You're out. But anyway, now back to the position trading. This is the reversion trade. You're out. And if you're going to do it, you got to do it like an algo. You don't sit here and say, you don't say, oh, well, I got that long. I want to see if this can keep going. No, if you're going to do the trade, then you do the trade. You're out at the zone, right? You can do whatever you want. The guys in my room had tried this right when I introduced this. Like, I like to hold it to see if it keeps going. That's fine, but that's not the trade, right? I mean, algos don't change their trade in the middle of their trade. They're set to do something. If you want to trade like an algo and beat the algo, or if you want to beat the algos, you got to trade like an algo. This is the trade. You're out at the zone. That's actually that line. You're out. Nice little profit. Done. That's like a scalp, right? We'll get into the other scalping stuff too. I still got another 15, 20 minutes on here. I'll show you the market pulse stuff that I wanted to show you. But anyway, if this comes back, then I'm going short. There's my entry, 04. Let's see if the spreadsheet says the same thing. Might be off a tick or two. That's back to this. These are the position tradings. 05 shows me my contracts. I can round up. I'll put on 6. That 05, this is showing me, I could put on 5 because he's not showing you. I'm going to have him do this so it rounds too, but, or at least shows another digit. Anyway, comes back, I'm going short 5 at 05. Bark and lick, because there was liquidity down here, right? There you go. It's been in here for, that's actually not that long, but it was here and it looks like they moved it down. So I'll put on bark and lick at 05. Let me actually set up a trade here. Holy camole, a live trade on a live trading webinar. Who knew? All right, let's see. What are my numbers there? Hold on 1 second. 56. 05. All right, so those are working if it comes back. We may actually have a trade on. All right, back to this. Again, there's nothing for me to do on the short side here for me. Yes, algo guy's still bullish. I'm not doing anything on the short side, but here you go. I think did this already retest? Let's see. Not quite. Close. Real close. Right? So that, if you're in this trade, you're not out yet. You shouldn't be. How many people in my trade room took this and said, "Oh, that's close enough amount." Well, you're not following the rules, right? Yeah, it's a tick that I missed it by, but when you add up a tick 100 times that you're going to probably do that same nonsense over a year, it adds up, right? So if you're going to put it on, here's the 1 ATR, here's the stop for the 1 ATR. You hold it till it gets back to the zone, right? And then we have variations where you can put on the 2 and then take the 1 as it comes back. We call that the back door. I'm not going to get into those because I don't take these trades on the webinars because they're very labor intensive, right? But this is what this pro tool will show you. You can make that trade if you want to be scalping. Speaking of scalping, let's see if you got any questions first. Paul Rodriguez, is this your content or the Bookmap Committee where I can find it? This is my content, but you need Bookmap. Right, let's go back to this, by the way. I never got through this. So guys, this is the stuff I use. So you get these disgruntled traders that come in that are idiots in my room that leave and they're like, well, I got out of there because I can't spend all this money for all these things. You don't have to spend all this money on the stuff I'm using. You do need Bookmap and you need the SI indicator if you want to do what I'm doing, or if you want to follow along with what I'm doing. This is the crux of my trading. We've talked about it, right? So yeah, you need Bookmap, the SI indicator, but this other stuff, this is just stuff I use. If you think it's important, great. I go over it every day. If you don't, great. Use whatever you want, right? I'm not telling you have to get any of this stuff. I mean, you don't even have to get Bookmap, but you're wasting your time in my room is what I'm telling you. Yeah, you can learn structure and everything else, but I mean, you're missing out. So you need this stuff. So this is what you need: Bookmap, the Bookmap MBO bundle. You need a Rhythmic data feed. They're the only, and this is all in the Bookmap marketplace, right? And Rhythmic is the only, as far as I know, it's been for years. I don't understand it, but they're the only ones that give you this enhanced data from the CME that shows you the icebergs and the stop runs, right? Market data right here, Rhythmic. You can get it through your broker too. It's cheaper. Why is this showing me 0 for everything? I'm not understanding what's going on here. So anyway, if you get this, guys. If you want to trade multiple products, which I highly recommend, I've been saying this whole time. So say you just want to trade bonds and grains, then you just get the CBOT. Say you just want to trade ES and NASDAQ, then you just get the CME. If you want to look at them all, then you get the bundle. Because otherwise, these cost individually, that's 40, that's another 40, that's another 40, that's another 40. So instead of getting these individually, you just hit the CME bundle, and then you save $40, right? And if you're non-pro or pro, most people are non-pro, click non-pro. If you're pro, it's more than double, right? And then you hit buy now. Again, you can get this feed from your broker too. It's usually a little cheaper. I don't know these days. I haven't checked. But if you want the all in one place, you get it through the Bookmap marketplace. But you have to have the data feed, or you don't get this information, right? All right, we're almost through this thing. And then what else am I using here? This is Apex, right? So any sale they have, and I hate this new website because the thing scrolls, but we talk about this every week. Highly recommend, if you are practicing, if you're new, whatever, if you don't have a large account, don't be risking the money you live on. You're not going to make it. The odds of you making it when you have to pay your rent or your car payment or whatever, or feed your family, and you have to make money trading, you have no chance. None, in my opinion. 0. When you can't afford to lose, you will lose. Goes with gambling, goes with trading. If you can't lose, you will lose. When you trade, worry-free, that's when you're going to make it. This is a way to do worry-free. I know there's a bunch of these out there nowadays. This is the one I put my name behind. I've been using these things for my trading accounts for multiple years. I've been funded on many of these things. They do exactly what they say they're going to do, right? Like, again, I hate this, how they have this now. You can do any of these. Use this code for any discount they have. Like right now they have 80% off, and you got 1 day. I think it takes 1 day to qualify. They do everything they say they're going to do, right? They even have so once you get it, then you can go in here. I know there's always, what if they're not real? I don't understand what they're doing. Guys, if they weren't real, you're going to know right away. And then they also have a Discord. So if guys are getting screwed over and not getting paid, you're going to know right away. It's going to be all over social media, and you can get in here and you can see if you see 50 people bitching that they're not getting paid, then I would say watch out. But I have had no problems with them for years and years. So the point is, if you're learning don't risk your own money. Learn what the hell you're doing. And the thing is, you can practice with these things. Practice, not a game. Practice, right? You can practice with these. Again, here we go with the scroll thing. But you need to make. So these are the ones I use. You got to make $9,000 before you lose 5. Right? So say you're practicing and you make $9,000. Well, guess what? There's a little bit. I think this costs like $59 to do it for the $150,000 account, and you make the money, and you qualify by practicing. Well, great. Now you have a live account. Now you don't have to risk your own money. Period. You see what I'm saying? So highly recommended. This is why I put my name behind. We go over it every week. But remember, guys, there are new traders on here. So, and then what else? Spot Gamma. We haven't looked at this all day, but we haven't done anything. So very important information. This is the hero. This is showing you options flow. So the options dealers are a big participant in the futures market. So when the options dealer gets loaded up with options, so these were like the community, I want to say community, but let's say the retail trader, they're selling options. Well, the options dealers they're on the other side of the trade. They have to buy the options. What do? They turn around and sell futures to hedge themselves. Very big part of what goes on here every day. Are they the only game in town? No. Some days they are. Some days everything this thing does, the ES does. Other days, so back to this, we were talking about this earlier. This day, what was it? It was 2 days ago, right? Where I was talking about knowing what's going on in here. You look at that, it looks pretty benign. Well, we knew there was some buy ice in here, so on and so forth. The setups were bullish. But the other thing was, this thing was getting killed. It dropped like 4 billion notionally. 1 billion is a lot. It was like 3 or 4 billion. I can't remember the exact amount. And ES just spun in place. And I said, I already had the thesis that this was based on the structure stuff. I'm like, here's balance. This thing's up at the top of balance, building balance. They're hammering. I remember what the other thing was. So they were hammering SPX options, and yes, futures were just sitting there. I'm like, well, what does that tell you? So the options they're still unloading in the futures market. Well, somebody's absorbing it. That's heads up right away for when this thing turns up. This thing's going to rip, and that's exactly what happened. And then we saw later in the day, I believe it was later in the day, or it might have been the same time. I think it was later in the day. Then we saw the same thing, Mag 7, or it might have been yesterday. I can't remember. Anyway, then we saw Mag 7 getting killed, which is those are the highest weighted stocks in the ES, or the S&P. And it was still spinning in place. I'm like, this is just telling me this thing's going to do that. And hey, look at that, right? So again, just more information. And guys, you can use all this stuff in conjunction, right? Like you use all this together to come up with a thesis. So that was telling me this was going to happen on top of the bullish setups. So you can imagine the edge you have when you understand this, you understand the volume events, how to trade the volume events. That's the edge. That's the best edge that I've ever seen. And that's all I chirp about. Quickly, the other thing I only got a couple more minutes here. I got to run too. So market pulse, right? So all we've been talking about on this webinar is traded volume, right? Like what's really occurring. We've talked about the liquidity isn't traded volume, but we talked about these volume events and so on and so forth. Market pulse is basically, and I will take credit for market pulse, at least the idea, because I told Bookmap a couple years ago, you need to get something like this. This is just like a gauge. This is telling me the speed of the orders coming in and the size for these different products, and it goes from 1 to 15. So I still use Tick Strike, love Tick Strike, but Bookmap is like above and beyond with what they've done with this, right? So I gave them the original idea, and they've just run with it. It's incredible, right? So back to you can scalp with this stuff too. But the ones I use on here, so you go over here, and this is just another add-on. I think you get this with the CME bundle as well, that has the SI indicator as of right now anyway. Anyway, you have these different algos that show you different things, right? So I use the volume pressure imbalance. That's what's showing on this chart. That's showing me the most buying or selling in the last hour. I set mine for an hour, right? The rest of them I use as default. We'll go over these very quickly, right? So you can see here, what was this telling you at this time? This was telling me in the last hour, this was the most selling that came in. You can see it in the bubbles. You can see it in there were no sweeps, but you can see them hammering it. Well, what did this tell you when it couldn't go lower? Right there alone is a sign something's up, right? Like they engaged the most sellers in the last hour, and it just said it moved away, came back to that area, and then did that, right? This is like a 10-point move, an 8-point move, right? So you're going to see how you can use all this together. Oh, what did I just fill on? I just filled on my gold. Hey, we got a trade on with 3 minutes left in the webinar. All right, so you can see they're hammering gold again. So what did I do here? Took the bark and the lick short. Very scary. If you're looking at a chart, I don't care. I got the pattern. I'm in the trade. Keep hammering this thing. Let's see it go to zero. Quickly, the areas I will get out as this moves lower. We just talked about this, about the R trades and everything else. There's really nothing here for me to get out. I just entered. This is a little scary here. I didn't see this, but I got in at that. This could bounce right off of here, but I'm in. This is where I entered, so I'm not getting out, right? But if, say I got it in here, I would get out of some here, but it's in here. So I'm looking at the bottom of this or the point of control. I'll probably get out of some, and or blue lug. So we haven't got to the lug levels. I'll get into that quickly. And or an opposing volume event. That's how I'll get out. So I'm holding this to blue lug here or here, and I'll get out. I'll get out of some at point of control, some at this, which is pretty. I think that's the same price. But I'll probably get out of all of them if it can't get through the blue lug, because the lugs are the second strongest thing I've ever seen in trading. That's this down here, Ludwig levels. Join it. You can get the 3-day trial. Say you saw in the Bookmap webinar, special pricing. There you go. And there's the reviews. There's one jackass on there that got mad that I didn't kiss his ass, so he tried to blast me. Complete clown. I'm not going to get into that right now. Anyway, so short gold. So quickly, what I was getting at. So that's volume, pressure, and balance. So then the other things you can look at. So say I'm short ES here, right? I don't even know if this is going to show me what I want to show you, but say I get short, right? And say those areas that I was just talking about. Say this is a market profile composite, and I'm like, well, or say it's even a lug, and I always got a lug, and I'm like, well, should I get out of the lug? Well, then you can look at other market pulse, and I got a copy of the ES here. Hold on, where's it at? Right here. So look what this shows me. So I have here. This is non-traded volume. This is the price. And I'll clear this up for you. These are these algos. Go to market pulse. And this is not to confuse you, right? I know this is a lot of information, but this stuff all works together, right? So I have on this chart, I have the price change algo, and I have the order book not in balance. Imbalance is showing you the net order book pressure. What is that showing me? This is showing me the games. Well, let's do order book pressure quickly first. Get price change off there. All right. So now this is showing me the games, and watch the Dan. I don't know if you have that video, the webinar I did with Bruce. You can repost that. I don't know where it's at right now. It's when I went over. He went over the market pulse. So this is the games that are going on here. So what is this telling me here? When this comes down here, what is this showing? It has nothing to do with traded volume. It has to do with the order book games, right? So this market came down here, and you can see as this came down here, they were putting in bids. Threshold. So this is showing me. This is default. All this is showing me is the last 5 minutes, right? Price change and you just open this up. So it's set for default, set for 5 minutes. Where's that? Right there, 5 minutes. So this is showing me, this first algo, I'm showing you the order book pressure. It's showing me the games that are going on. The market comes down here, they put in bids. The market responded. Market comes back down. They not only put in bids, they pull offers. So think about it, right? If you're looking to buy and you see, so you're like, okay, I want to get long down here, and all of a sudden the offers start disappearing. You're like, oh crap, I gotta get in. I gotta chase this thing up, right? This gives you incredible information itself. So back to say this is the Ludwig level, and I'm short, and I'm watching an area. It could be any area, right? And I'm trying to determine whether I can hold this for a bigger move or this is an area I want to get out. We already know all about that. We talked about the regular volume, the actual traded volume. Well, you can use this all together. So I know this is an important area. Say I see volume, pressure, and balance. They're selling it heavy. Then I see, and it's not responding like we just saw. I just showed you that. And then you see on the order book game, they're pulling offers and putting in bids. That's telling you this market is very likely going to bounce off this area because they're opening the door with the order book. So they're beefing up the bids, right? And they're pulling offers. The market should do that. If it doesn't do that, that's telling you something too. But this is an area where I would say, okay, they tried to sell heavy. We just saw that. And then they're playing order book games and the market responded, right? So that's that algo. Look at that. I mean, it's right off of there. This is fleeting, guys. It's every 5 minutes. It can turn around here. But you can see every time it comes down there, they're putting more orders in the order book. It doesn't mean they're filling. It just means they're playing that game. If this starts to fail, then it's telling you something, right? Now, this is like this could be a trade in itself, right? You're like, okay, they've done this how many times here? If this turns around and gets through here again, then it's probably going to get killed because they can't hold it up with their games. It's responding right now to the upside. Really important information, I would say, right? And then the other algo is the price change algo. You can use this. Let's get this one off. That's this. This is not traded volume either. This is showing, look at this thing. I mean, guys, when you can see what's going on in these markets, you stop beating yourself up mentally like, oh my God, this is impossible. Now, even if you don't trade this, you know what the hell's going on. Look at this price change algo. Look at this. So this one came in. You got to be careful with this, though. It's not just blindly buying it every time this thing spikes. But the point is, because when the big money does come in, which is probably 10, 15% of the time, the other 85% of the time, it does that perfectly. But this could price change for 30 points. And you're like, oh, I'm buying that because it's a price change, and you get run over. So just take it for what it's worth. But the point is, you can see this thing every time it spikes, it rips the other way. This one kept coming. That tells me the bigger money was in that. I think that's that volume pressure and balance area we just looked at. Bigger money pushed it lower, but then right back to the algoville. Look at that. Boom, 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 boom. Do you see? Now you understand what the hell is driving the markets. So even if you're not trading it, you just have peace of mind. So say you're in a short here or a long or whatever. You understand why it feels personal when you're in the trade, right? Take it from me. I've been watching this crap, I'm going to swear there, watching this stuff for 25 years, and it still feels personal. Listening to my webinars, I bitch the entire time like there's a camera in my office. I always joke about that, right? No, it's this stuff. It's not messing with you. It's these algos that are playing off this. So if you're in a trade, you're like, oh, yeah, that's just price change. Oh, yeah, that's just price change. Oh, yeah, that's price change. So you can see, so for instance, you say you're short. We already saw the games in the order book. Then you say, hey, that's price change algo. That moved too far too fast. I'm getting out of some here. And I know that's order book games too. And I know the volume pressure and balance just fired off. I'm out of 3/4 of them. Do you see how you can use everything together? As this is it. Like there is no better edge on the planet for futures trading than the SI information and then what they did with Market Pulse. You guys are, I was telling my room this yesterday, you have no idea how far ahead of the crowd that you are when you understand this stuff. It's unbelievable. Like, you know, I want Bookmap to grow, but I'm kind of glad that a lot of traders don't use it, right? Because that is even better for us. So that's that. I mean, if you look at this and you don't see, you just don't see. Like, you're just not getting it. And there's nothing really I can do to make you get it. But that's what I see, and it's incredible. All right, guys, I got to go. Can you please talk about how you trade post and iceberg detect? Well, that's all we've been talking about. I'm not sure. So you can get my course. You can learn it there. You guys, you don't need my course to come in my room. You can learn it live. It's going to take you a lot longer. But I do this every day. What I'm doing in here, I do every single day. Most days, twice a day lately. And the PM webinars are canceled because there's nothing going on. All right. Anyway, so we saw the games that are going on here, and then you see this game. How much information is this showing you? We know they were pulling the thing. You know the price change, and then you see liquidity. Where do you think this is going? All right. You can have a trade just for that alone. All right, I'm out. Do this every day in my trade room. And that's about it. And the only thing I have on here is, and I'm short gold, and it's just playing LO games now, right? I'm sure this is the price change, and this is, I'm not panicking. If it pushes all the way through to this is where my stop out is. On to the next trade. Trading probability. We didn't even get into trading in the zone rant today. And I didn't get into the Bitcoin either. Just quickly. I posted this yesterday on Twitter. I told my room too. We actually saw this real time in the room yesterday. I wanted to cover this real quick because a lot of you guys trade Bitcoin. This is exactly what happened yesterday. This is what I'm talking about. It doesn't matter what market you're trading, right? Right here. We talked about this in my room when it happened. Futures. 25 is a threshold. You would think, what? 25? What? Blah, blah, blah. Yeah. You see this pattern? ATR, retest, confirm, you're in there. This was a $3,000 move just into the close, and I think it went, let's see, where did it go? That was 68,000. Yeah, pretty much stopped there, but how's that trade, right? Guys, it doesn't matter what market you're trading if you understand the thresholds and the way these things trade. And believe me, the futures affect the cash. So you can trade futures or you can affect the cash. I posted this and then just quickly posted this a couple months ago, and somebody laughed at it when I posted it, and then it came out that the futures, these big funds are liquidating in the futures. Where's that? I can't find it right now. Go to you can read about it. It's one of these posts that I put. But the funds are definitely liquidating or entering positions in the futures. So you can trade the futures or trade the cash. You get great leverage in the cash too. All right, that's all I got. I will see you guys next Thursday. Thank you.